This is Business Day right here on ET Now. I'm Avan Dabash. Let's get you a sense as to how the markets panned out this Thursday before we take you through the top headlines. Well, it was the expiry for the December series, a fairly choppy session. You had the selling pressure which aggravated toward the end of the session, so it was below the 5,900 level. The market breadth too turned exceedingly weak, but what was prudent to note was the kind of volume activity that we witnessed today, over 4 lakh crores, and that's the highest ever total turnover that we saw. 5870 for the Nifty on last tick, 19,323 for the Sensex, so that's down by just about half a percentage for today. We get you all of the top stories after the headlines. Prime Minister Manmohan Singh says 8% growth will be a tough task given the weak global economic conditions. He also makes a strong case for a fuel price hike, saying that most of them are underpriced in India today. National roaming may come at a price for mobile users. Telcos are likely to hike tariffs to offset higher costs of roaming, even as the 31st of December deadline approaches fast. Markets clock a record turnover on the last day of this year's F&O series. The combined turnover of BSE and NSE tops 4 lakh crore rupees for the first time ever on a day of directionless trade. Ratan Tata will step down as the Tata Group chairman tomorrow after being at the helm for the past 21 years. Tata insiders say it's going to be business as usual at Bombay House, the Tata Group headquarters. Those were the top headlines, but let's take it straight to the important story for the day. And speaking at the National Development Council meeting, the Prime Minister Manmohan Singh today said that achieving 8% growth for 2013 will not be an easy task as the global environment remains weak. The newly formed Cabinet Committee on Investment, he says, will be instrumental in kick-starting large-scale power projects. And as the union budget draws near, he reiterated that the GST should be implemented as soon as possible by the states.
Achieving an average of 8% growth following less than 6% in the first year is still an ambitious target. As the plan document makes clear, the high growth scenario will definitely not materialize if we follow a business as usual policy. The most immediate problems we need to tackle are the implementation problems affecting large projects, including particularly power projects which are stuck because of delays in getting clearances and fuel supply agreements. We have taken a number of steps to deal with this problem, including the establishment of a new Cabinet Committee on Investment under my chairmanship. We need to increase the tax ratio as a percentage of GDP through a combination of tax reforms and better tax administration. Early implementation of the goods and services tax is critical in this context. I hope we will have the cooperation of the states to introduce the GST as quickly as possible.
Straight to the equity markets, a very directionless day of trade, and you had the selling pressure which came about by the end of the day, so fairly disappointing on the last day of expiry, and we didn't even manage to conquer 5,900. The market breadth also exceedingly weak. Broader markets too were in tandem with the way the benchmarks cracked, so down by just about 0.5% for the mid-cap index. The small-cap index, in fact, saw a bigger cut today, down by close to 54 points. What happened with the sectoral movers? Well, you had oil and gas, technology, those were the pockets of weakness today. Banking, on the other hand, showcased quite a bit of resilience, and you had the PSU lot also, which did fairly well for itself. In terms of the big losers for today, you had JSPL, which tumbled in the session. BHEL, so from high beta, that didn't do well either. You had Ranbaxy as well as GAIL down by 1.5%. Some of the stocks in focus today, Kalpataru Power, it was up by close to 3.5% on winning an order worth 950 crore rupees. Volume activity also very smart, 3.7 times the 5-day average, and in the last 1 month, the counter has gained close to 11%. Another stock in news today was Hotel Leela. Reports indicate that Reliance Industries is going to buy the business park in Chennai for a sum of 172 crore rupees, and that deal is likely to be announced soon. Once again, volume activity very smart on this one as well. Something like an HOEC also spurted, as reports say that ENI is likely to sell its 47% stake in Anadarko at 135 to 140 rupees per share, 2.7 times the average, the volume of the last 5 days. NMDC in the limelight on the upside, as it is likely to acquire Brazilian mine for iron ore, and Reliance Power 2, it came up from its gains. The government will be discussing the modalities of the Sasan project today, and those discussions are regarding the surplus coal from the blocks which were allocated to Sasan UMPP. As you can see that by the end of the day, it succumbed to quite a bit of selling pressure. You had Clariant Chemicals, which did well for itself, as the parent has agreed to sell some units to SK Capital. SK Capital will be buying the textile chemicals paper specialities unit from the company, as well as the emulsions unit from Clariant, 1.5% higher by the day's end. Some of the big index gainers, it was clearly banking all the way. So Axis Bank was very smart in the session. Bank of Baroda did well for itself, as did an SBI. And you also had Dr. Reddy's, which was higher by just about 0.5%. What was clearly in focus today was today's listing, a stellar one at that. It listed way above the issue price of 135. It went on to gain a good 10.5%. Volumes were also massive, and we spoke with the management, who was very optimistic about the growth prospects. They will be adding 20 new retail stores, and they also said that they were fully hedged on gold exposure and see no impact on account of the price volatility. Well, what about the series gone by? Well, you clearly had a marked outperformance by the broader markets. So the mid-cap index and the small-cap index really did well for themselves. For the frontliners, not that great, higher by just about 1%. And it was really the mid-cap that flexed its muscles. In terms of sectoral indices, metals all the way on account of the fundamentals, which are really supporting this pack. So you had the metals index, which gained a good 8%. Autos following suit, and real estate higher by close to 4%. So clearly your rate sensitives did well for themselves. On the other hand, it was the defensives which were a bit dodgy. So the FMCG index, this entire series, has been down by close to 2%, and the technology index also down by 4.2%. Some of the big gainers for the series gone by, you had names from the banking as well as the metals pack, which really featured on the list. Take a look at Bank of Baroda. JSPL was up by a good 17%. Tata Steel also did well for itself, as did an SBI. Losers, on the other hand, the big underperformer, no doubt, has been the IT index. So you had big names like an Infosys, which was down close to 6.5% this series. Unilever, so clearly your defensives once again. Grasim as well as Coal India was down by close to 4.5%. Well, that pretty much sums up how the equity markets panned out for today, as well as for the entire series gone by. Time now to hear out some investment ideas from prominent market voices.
We are overweight consumers. If you look at the quantum long-term equity funds holding, it is overweight consumers. Unless you're talking about a booming global GDP, which I don't think is going to happen, any sort of lukewarm recovery or a 2% or 2.5% global GDP growth rate will favor India.
I would bet more on the CV cycle turning up in 2014, and you could bet on an Ashok Leyland or Tata Motors. As far as that is concerned, we are having Eicher Motors. Names in the NBFC itself, which could be candidates for getting a banking license. So the risk is to go out is to be estimated. We are not yet zeroed in, but things do look quite exciting in the banking space, particularly the private sector bank names, the old private sector bank names, as well as the NBFC space.
Okay, away from that, then let's find out what 2013 holds in store for us in terms of what the leading brokerage firms are optimistic about, as well as what their view is on the overall Indian equity markets. Now, most of the firms are bullish on banking, and they believe that mid-caps are likely to outperform the large caps. Let's get in Darshan Mehta, who now joins in from our research desk with all the details. Darshan, what's the lowdown and what are the brokerages talking about?
Well, we've done a compilation of all the brokerages and the strategy reports that have come out recently for next year. So clearly at this point of time, banking is something that, a lot of brokerages like, especially the private banks, because ICICI Bank seems to be featured in a lot of brokerage recommendation, and even Axis Bank at this point of time. Apart from it, mid-caps is something that, brokerages are bullish on. Rather, than the large caps. So mid caps, they believe, will outperform the large caps. Despite the big run that we've seen in metal stocks, most of the brokerages still remain negative on, the metal space. So like Sesa CLSA is very negative on it, and a couple of brokerages are negative on Tata Steel as well as JSW Steel. The only exception here is Sterlite, because a couple of brokerages have positive views on Sterlite for the year ahead. Apart from it, PSU oil and gas stocks is something that they like. CLSA likes BPCL. Goldman Sachs likes ONGC at this point of time. Oil India features in one of the brokerages. And among the private players, Kane India is the one that features among the brokerages picks for next year. In terms of, a couple of stocks on the mid-cap space, IRB and Syntex, both stocks fell significantly over the past few months. But, the target prices are still very, very high for quite a few of these brokerages on these two counters. And a couple of consensus sells is the entire power space, especially Adani Power and Reliance Power. And among the telecom space, Idea features in the list of consensus sell. If you're talking about individual brokerages, CLSA has high conviction on BPCL as well as ICICI Bank, while a sell on Sesa DLF as well as Idea. JP Morgan is bearish on Reliance Industries at this point of time, along with Hero MotoCorp. UBS is a little bullish on BHEL and is bullish on Sterlite, but negative on Adani Power. Citi has given 5 stocks in which they see it's a high risk, high return. The stocks there, JP Associates, Jet Airways, JSPL, IRB as well as United Phosphorus, and most of them have given decent returns in the recent time. Bank of America bearish on the metal space but bullish on Kane India as well as Reliance Infra. Nomura is bullish on IRB as well as Syntex, but bearish on Adani Power as well as Idea. Morgan Stanley is bullish on Sterlite among the metal space, but bearish on the power space, Adani as well as India Bulls. And finally, Goldman Sachs has a conviction buy on ONGC as well as Bajaj Auto, but a sell on Maruti as well as Reliance Power.
Darshan, many thanks for giving us those details to the telecom space. And even after Telecom Minister Kapil Sibal made it clear that national roaming would be made free from next financial year, telecom companies are not happy with the proposal. They assert that the move will have substantial cost implications, and they plan to soon submit their response to the regulator TRAI on the same issue. Gauri Dwivedi now joins in with the details. Gauri, what is exactly the issue for the telecom companies?
Well, as far as free national roaming is concerned, remember there are serious cost implications involved. There is carriage fee, there are interconnection charges, there are termination charges when calls move from one operator's network to the other operator's network, and it's the subscribers who have to bear the cost in the end. And now what the proposal really is that the roaming will be made free. So in a sense, the cost will have to be borne by the operator. It will have to be taken in by the operators. And how will really that cost regime work is something that the TRAI's roadmap will make it clear. But there will be certain cost implications. It could be anywhere between 10 paisa to as much as 15 to 20 paisa, which is fairly significant for telecom companies, which is what they will really indicate to the telecom regulator TRAI in their formal official response to TRAI's consultation paper on free national roaming. Telecom companies will also make a pitch for increasing tariffs. Remember, already the business models of all these companies are under tremendous pressure. Spectrum prices have gone up very significantly. There are payouts in the pipeline. So clearly companies will make a pitch for increasing tariffs. So there is a fair possibility that as national roaming really kicks in, free national roaming kicks in from next financial year onwards, it's likely around July 2013. That is when you can expect tariffs to also rise significantly, anywhere from 10 paisa to as much as 20 paisa, because that's what companies are saying. Their costs will increase, and it has to be cost-based tariffs, which means the tariffs will have to rise.
Thanks very much, Gauri, for bringing us all of those details. Meantime, moving away from that, Ratan Tata will be stepping down as the Tata Group chairman tomorrow after being at the helm for the past 21 years. Now, insiders from the Tata Group say it's going to be business as usual at Bombay House. That's the Tata Group headquarters. Let's get in Vijay Iyer, who joins in live from our Mumbai newsroom for more details on this. Vijay, what exactly can we expect tomorrow?
What we get from the insiders at the Bombay House is that, as you're rightly pointing out, it's going to be business as usual because knowing the Tata Group and knowing Ratan Tata particularly, he wants to keep this a very low-profile affair where it would be the last serving day as the chairman of the Tata Empire spanning across 2 decades. to be 21 years to be precise, which is coming to an end, and he would be officially handing over the baton to the chosen Cyrus Mistry, his successor, to run the Tata empire going forward. But yes, there is a sense of nostalgia because Ratan Tata has worked out of Bombay House for close to 50 years. He took the reins in 1991 when the group was just a 10 billion group, taking it to close to 100 billion group in these 2 decades. He has particularly gone for various global acquisitions in Tata Steel. We know the Chorus and also Tetley and also the Jaguar brand of UK. So in that sense, it's going to be a legacy which would not be easy to be filled by anyone. But yes, Cyrus Mistry also comes at a time when there are a lot of challenges facing the Tata Group. But nevertheless, it's going to be a historical movement and historical calendar date for the Indian corporate history and particularly the Tata Empire.
Thanks very much, Vijay, for bringing us those details. It certainly is going to be a historical day and at the end of an era of sorts. Moving away from that, then, the Power Ministry today will review surplus coal diversion from Reliance Power's Sasan plant to its Chitrangi plant. Now, this is happening even after the CAG had raised its objections and recommended the cancellation of a coal block at Sasan. Let's get in Nitya Balakrishnan, who now joins in live from New Delhi with more details. Nitya, despite CAG's concern, will there be a nod for Reliance Power's excess coal diversion from the government?
Well, for Reliance Power, the Sasan Ultra Mega Power Project, which is a 4,000 megawatt project, has always been a big bone of contention. Sources indicating that the first unit will be commissioned very shortly. But remember, a few weeks ago, we did see the CAG report that indicated Reliance Power was a beneficiary. In fact, it did recommend that one of the coal blocks for the Sasan Power Project, which is Chatrasal, should be taken away. The mining lease for that should be cancelled, was the recommendation coming in from the CAG. But what we're given to understand is that an inter-ministerial panel in the Power Ministry will be meeting later today to actually review how to divert extra coal, surplus coal from the Sasan project to Reliance Power's other project at the Chitrangi site. Now, as far as Sasan is concerned, Chatrasal, Moher and Moher Amlori, 3 coal blocks for this power project with reserves of close to 25 million tons. And surplus coal, according to what an EGOM as well as the AG had opined a little while earlier, is that surplus coal can be diverted to an alternate project of Reliance Power's, the modalities of which will be discussed at today's meeting. So clearly, despite the CAG's concerns, it seems like Anil Ambani's Reliance Power is in for a little bit of a smooth sail going ahead when it comes to the Sasan project.
Okay, thanks very much, Nitya, for those details. Time for our special year-ender series, Year to the Ground. Now, the year 2012 was something that the banking industry may possibly want to forget. You had things like bad loans, which spiked the corporate debt restructuring and rose to historical levels. Simran Gill and Anirudh Ghosh take you through the year that saw banks draw a sharp criticism, not just from analysts, but also from the government as well as the Reserve Bank of India.
NPAs rise or NPAs fall depending upon the economic conditions prevalent in the country. It is the stress which is reflected in the rising NPAs.
It's been a year of unprecedented pain and asset quality issues in the banking sector. The year 2012 saw an alarming rise in non-performing assets, even as corporate debt restructuring rose to historic levels. Latest RBI data shows that gross NPAs in the system grew at 47% to over 1.6 lakh crore in the first half of FY13. Not just that, banks have restructured over 37,000 crore rupees of corporate loans in just the first half of the fiscal, as compared with 40,000 crore rupees in all of FY12. State-owned banks like SBI, Central Bank of India, UCO Bank and PNB saw their gross NPAs rise to around 5% of the loan book this year, causing the RBI to raise the red flag.
Restructuring has not been done in an objective manner. It is heavily biased in favor of public sector banks. It has substantial bias towards more privileged borrowers vis-a-vis small borrowers. Viability aspects might have been compromised in giving restructuring.
The central bank's war on inflation meant that policy rates and in turn lending rates remained high through the year, something which took a toll on growth as well as banks' asset quality. Even top lenders like SBI were forced to turn cautious to tackle the NPA menace.
We had declared war on NPA and we seem to be winning the war.
Even so, bankers maintain that concerns on asset quality are overdone and that they are confident of the sector bouncing back.
The real uptick has been in the restructuring, because if you see regular growth on NPA. They've just gone from 2-point-some% to 3%. It's a restructuring that's gone from 3 to 5.5.
With inflation easing, interest rates are expected to come down as well, thereby reviving the credit demand from corporate India, something that could signal a turnaround in fortunes for Indian banks in the new year as well. With Simran Gill, Anirudh Ghosh, ET Now, Mumbai.
Well, that was the year that was for the entire banking industry. Moving on then to some national news, and in his first encounter with the centre after his victory in Gujarat, the Gujarat Chief Minister Narendra Modi attacked the central government over declining growth rate and said it is disappointing and unfortunate. Attacking the government for lowering the growth target for the 12th year plan, Modi said that though the target of 9% GDP growth appears ambitious, it is possible to achieve it if the government had the political will to do what is necessary.
पिछली बार जब हम मिले थे तब 9% ग्रोथ की बात की थी, 7.9% पर आकर के अटक गए और आज इतनी बड़ी मीटिंग, इतना बड़ा फोरम, इतना बड़ा देश सिर्फ 0.3% आगे बढ़ने के लिए चर्चा कर रहा है। ये कितनी बड़ी निराशा है। यानी अगर आप 8.2 का लक्ष्य कहते हो, इसका मतलब कि ओनली 0.3% आगे बढ़ने की बात कर रहे हो। और इतना ही नहीं, दबी जबान में बोलते समय ये भी कहते हैं कि शायद 8.2 भी अचीव करना मुश्किल है, शायद 8 पे अटक जाएगा।
Meantime, to some more important news which has been hogging the limelight today, and a massive controversy broke out right at the start of the NDC meet, where Tamil Nadu Chief Minister walked out of the meeting saying that she was given only 10 minutes to speak and that she was not allowed to complete her speech, which she claims amounts to humiliation of non-Congress chief ministers.
At the very beginning, we were told that only 10 minutes would be allotted to each chief minister, and that after the 10 minutes were up, a bell would ring. This is unheard of. This has never been the practice before. I had barely begun my speech when I was told that the 10 minutes were up, and they rang a bell. This is utter humiliation of a chief minister who has come all the way to Delhi to present the views of the state government in the interest of the welfare of the people of the state of Tamil Nadu and in the national interest.
That brings us to an end of this edition of Business Day. Thanks so much for watching.